Welcome back. So, we are again going to start a very valuable discussion. Actually, it is a past paper discussion targeting December 21 paper. So, as I always do, I do not just limit this to just one paper, that is the December 21. As we discuss, you can see how examiner has been testing from the starting of this syllabus so far. What are the different types of questions that have been tested? Especially, this is the area what I can describe as governance and audit. Why I say audit? The bigger part of the syllabus, 25% risk of material misstatement, deals with audit planning type of issues, the internal control deficiencies, things like that. And then usually during the last, if you look at couple of years papers, sometimes corporate governance has been tested as a separate question. So, in this paper you will see pre-scene. Now, CA conducted pre-scene analysis. I have the same slides that were presented to you as topics that we expected by looking at the pre-scene. From there now we can connect to the unseen, and then most importantly what I want to say is that the reason for lower pass rates in a subject like that is partly due to number one, you can see possibly if you are struggling whether these are any other reason. Number one, you have to be absolutely thorough with the learning outcome, right? Not to have a very in-depth knowledge to memorize or things like that, but certain areas you need to have very sharp focus, right? So, what those areas you should already know, because you know this is open book examination, but what really matters in exam context is how quickly you can apply what you know. So, therefore, number one is you have to have a very good knowledge about each learning outcome, how examiner can test. For example, in this paper you can see first time I think materiality has been tested in relation to audit reporting, right. So, then while this is not auditing paper, the chapter in the study text on true and fair view, you should be able to understand how materiality works, overall materiality, performance materiality, and how it could affect auditor's opinion. That has been tested. So, now if you were studying before the exam, assuming you are a student who already faced this paper, right, then before the exam you should really understand how materiality concept can be used in auditing as well as how it could affect auditor's opinion. That is one example to say that you have to be absolutely thorough with the knowledge. Secondly, you have to practice. So, do not try to read suggested answers as it is, do not just read and go. The more, take a blank piece of paper, write your own answers, mark it again. So, even in this discussion wherever possible, of course, to make sure that we use efficiently, I have added certain analysis in slides, but what really matters as we discuss even in this webinar, I invite you to have a piece of paper. As I analyze, you can put down in a mind map and start writing, and then at the end you have the answer for the full thing. So, with that we will start our discussion straight from the pre-scene. Now, pre-scene, why I want to start with the pre-scene question is that that is area before the exam we know the possible questions, right. Now, even now when you are preparing for the exam, the pre-scene is really helpful. Now, this paper December 21, when you read this paper, especially the pre-scene related question, I mean in the unseen, without giving any detail, I mean with limited details, examiner straight away connects the question to pre-scene information. So, that is the benefit of having pre-scene a month ahead, and you should be able to really summarize and connect those pre-scene examinable point to learning outcome and start identifying possible questions. So, these same slides we presented to you, right, at the webinar we had before the last examination. You can watch our pre-scene webinar. So, these same slides I am taking. Now, we do not need to take a lot of time. I am sure when you watch this webinar, you should have gone through the pre-scene, no point of just reading the entire pre-scene for many hours. But having said that, I have carefully captured what is relevant for this governance and audit section from the pre-scene. Now, especially while pre-scene has a lot of information about historical information about the company, like a story and what issues they face, right, as well as numbers, this information specifically talks about our subject, that is governance and audit. Especially I have captured under financial reporting process. Again, open your pre-scene now, go to page 5. This is how I have summarized and articulated the finance structure of this company. So there are 5 executives, they use QuickBook, and then in addition to QuickBook they use another system, standalone system, invoicing system, and cashier is updating that. Then in 2019 they have implemented a ERP. Case study specifically says staff is not IT savvy. They don't have good IT knowledge to use this ERP system. Now imagine if you really want to apply concepts to this paper, can you relate? I am just asking something to test your knowledge. When you say the people in finance department, they don't have the competence, what is the concept in auditing or financial reporting it relates to? Remember, that relates to control environment. One part of the control environment is to ensure that, especially those who are in finance department, they have competence. Why they need the competence? Especially one part is the technical knowledge. The other area, if they are not thorough with IT system, there may be errors, unreconciling items, etc. So those are important indications from the pre-scene. And then another thing, inventory module not integrated. Now you see how many systems in this case study. They say there is a QuickBook, the invoicing system, the inventory module, ERP is partly done. So all these informations were given as a part of the pre-scene. Then additionally, how it works, when customer pay, right, the invoice is given by the cashier. So the invoice comes, and then what happens is that based on that, the revenue collections and banking happens. So that is again done by the cashier, and then the information passed to accounts executive. Now in the pre-scene analysis, one thing we highlighted, especially which this slide, same slide when I presented before the exam, we said, look here, there is internal control weaknesses. Why? Cashier is issuing the invoice, collecting and giving information to banking. It looks like cashier has a lot of activities, right, incompatible activities, handling cash as the custodian, as well as printing, invoicing. So that's not good. Then if you look at the other part, how the financial statements are produced. Now this slide says, because you see in your syllabus the big topic, if you read, I will open in a little while. If you are preparing now for this, if you are a smart student, very limited time, now aggressively preparing for the exam, while there are many books, you will only look at a small booklet, rather 3-4 pages. That 3-4 pages include the syllabus learning outcome. And each learning outcome, you should be confident that I know what this means. So one of the learning outcome in syllabus for you to have an understanding about internal control over financial reporting process, the process in which financial statements are produced, how transactions are summarized, say to TB, and from there how financial statements are generated if it is a ERP, the heart general ledger, the other modules like inventory, is it connected, are there manual journal entries? Now these topics relate to what? ICFR, internal control over financial reporting. So this slide really captures that type of aspect. And in addition, the bigger topic that this relates to is the COSO framework, 5 components of COSO. In this case study, how do you, if the examiner really wanted to test, how do you describe, for example, control environment, you know, the other aspects of yeah, so if you look at the other aspects of internal control frameworks, right, control environment can be tested, risk assessment can be tested, right. Then control activities, information communication, information system and communication, 1, 2, 3, 4 and 5 monitoring. So, these 5 components of COSO, right, as you know it addresses 3 main objectives and it applies across the organization. So, one of the objective is what? One of the objective is reliability of financial reporting. So, now what we are talking out of this 5 in this slide, essentially about information system and communication. That is where we analyze how financial statements are produced. How it is produced here? So, the transactions are summarized, daily transaction summary sheet. Now, who prepares this summary? Is information automatically coming or somebody is manually entering? What is the possibility of errors in this summary? And then from that summary is the source documents for QB ledger posting, the ledger is updated, and then if it says that finance manager verifies, maybe the summary is checked, but what is behind the summary may not be checked, and then prepare financial statements. Now, what this essentially suggests is that when you go through the pre-scene, it clearly says that there is a manual process. After the summary, you have to manually prepare financial statements. Imagine you get maybe to Excel and do the financial statements, and after that the GM approval. So, there is a general manager approval of the financial statement. So, that closing process, specifically case study says that they make the journal entries after preparing financial statement, they pass journal entries. That is something given in the pre-scene. So, that suggests, now see, I have put a question mark, the internal control over financial statement closing process, especially big topic journal entries, right, this is not controlled. The case study specifically says that the journal entries, they can backdate, and not only that, the some people like the CFO has super use access. So, this information well presented in the pre-scene. And then if you go to pre-scene, page 6, you can now look at, I mean, when you watch the webinar on a past paper, especially you need to have both pre-scene and the unseen with you as we go through, and not only that, I said you can also develop the answer as we go along. The company is facing issues in tracking obsolete items as well as their value. Now, there is very clearly something given. The company is struggling to identify obsolete items as well as their values to record accurately in the financial statement. The company has failed to carry out annual physical stock verification in a few showrooms and the main store due to lack of labor during lockdown period. So, this is impacted by COVID. 2 issues presented in this paragraph. One is, remember, big topic for your syllabus topic when it comes to ROM, risk of misstatement. You can analyze, always put into 2 buckets. One is risk at financial statement level. Financial statement level, good example is IT. You know, the people in the finance department, they are not IT savvy. As a result, can there be errors? That's, we don't know which error, which assertion we don't know. That's why it's called financial statement level risk. But in this case, we clearly know that if there are obsolete inventory items, the inventory valuation assertion at risk. So, that is assertion level risk. So, the other example is assertion, not the example, other categories of risk of misstatement is assertion level. So, for assertion level, the good example we can give here, inventory valuation. Now, inventory valuation in this case study, inventory may not be accurately valued due to 2 reasons. One is obsolete items, that is where we have to provide, or we have to write down those obsolete inventory from cost to NRV. And also there is an issue where the quantity is right. So, both can affect the valuation. You can easily write, if examiner wanted, if examiner asks in this paper, now we will look at the unseen in a little while. If there was a question, evaluate risk of misstatement, this is one answer. Inventory may be overstated because there are obsolete items, those items may not be properly identified. As a result, such stocks may not be written down to NRV full stop. You will get marks for writing that. Similarly, the inventory valuation may be affected by incorrect quantities. And third risk, if you want, you can write it separately, because these are valuable items, the electric equipments, etc. When there is no perpetual inventory system and a perpetual count, the cyclical count, perpetual inventory ideally means in an ERP, your inventory is always in the system, the up-to-date, today's balance you can get it. But then what is in the system can be verified if there is a periodic or cyclical stock count. If there is no such count, one is there may be incorrect quantity, other one is fraud risk is high. So even if you want to talk fraud risk, you can. Now I am deviating little bit. Why? Because this is a good revision for you. You can relate this information to talk about ROM. But in the actual unseen, what examiner decided to test, like we estimate, like we guessed or predicted in the pre-scene discussion, internal controls. So I have the same slide, these are same slides that were presented at the pre-scene. If you watch the webinar, you can now go to CA webinars and search for pre-scene discussion. That was a Zoom discussion. I think we had a live discussion. Now this slide also be said when the session was done. One is watch for implication of multiple system not connector. This is one issue we wanted students to watch before the exam, and actually examiner expected this as a big topic. When it comes to the discussion of the answer, you will see, because obviously we can see, three systems are not talking to each other. A QuickBook is there, there is ERP system, inventory module, they are not talking to each other, there is no integration. As a result, there is a possibility that certain entries may not be properly recorded. So what we have to do? So you have to do something about it. Either you integrate the system or reconcile. Those are the two answers. So like that you should be able to think simply. The other issue that I explained clearly, areas like cashier, there is lack of segregation of duty, and then inventory valuation we discuss. There is a big issue, especially not only valuation, two things we discussed, tracking obsolete items as well as the fraud risk. The journal entry and access control, there is a big issue, right. Now here some extracted information from the pre-scene. 5 accounts executives to feed data into QuickBook account in package, namely these are the 5 people. All other transactions are handled by executive, one executive in general. Again you can question this information, what do you mean by all other information? Can there be segregation of duty in this also? Cashiers attending to all aspects of the cash transaction as well as invoicing, which I mentioned to you. Now these are some information relating to journal entries, right. They are, if you see, this is particularly about journal entries. GM Finance personally get involved in the closing process since the system used by the company does not facilitate period end closure, allow to backdate and pass those entries. That is why I said earlier, you prepare financial statements, later pass the entry. I mean that itself is a really high risk. Usually what should happen, right, you do certain closure process in a system, it may be the year-end stock adjustment, the impairments and various other adjustments through the system itself, and then it's frozen. After that you can't do any adjustment. That's how usually system works. But in this case, the fact that they can backdate is a big question, and that again can be misused for fraudulent purpose. And finally, to ease the management of 3 separate systems, right, IT 3 system, the CEO. Now see, this is a big topic again. CEO and GM Finance have been given super use. Now super use is deadly. Now look at actual frauds. In Satyam, more than 7,000 invoices were created to the tune of about $1 billion, where certain invoices were created by super user and those can be hidden and others can't see. So therefore, especially the fact that non-financial people, like why CEO is having supervisor, CEO passing entries. Now that's really dodgy. So those things you have to be watched. I mean, there are enough information in the pre-scene to write an answer. That's what we discuss in the pre-scene. So now the course of framework I explained to you, especially this information relates to information system, going to the reliability of reporting. You have to have a very good understanding about course of framework. Now I also presented this slide in the pre-scene discussion. Now students, prepare for examinable question. That's what I said. Look at the learning outcome. This is what I said. Smart students will look, okay, what questions from this pre-scene examiner can test. One is internal control, right? Demonstrate. Now this is a very theoretical question to understand how IR, CR, DR works, especially IR and CR making ROM. All of these you can watch our past webinars. These have been theoretically discussed. This is the topic I mentioned to you, ICFR, internal control of financial reporting. Evaluate in a specified scenario internal control relating to financial reporting process to identify deficiencies, especially journal entries. Now you see the examiner has given information about this. The other area that you can expect, you know, I mean maybe in the next examination, the consolidation. So these things we discuss. Now let us look at from this pre-scene what examiner decided to test, right. So let us go through that. Then like I said, we will also we can also discuss the answer, right. Now I just want to draw your attention to the question, I think it's question number 3. Now we already looked at the analysis summary of the pre-scene. Now how examiner wanted to test which learning outcome. I think that's question 3. Yeah, this is the one. Now usually I have advised students in the exam pressure without having to read A to Z. Let's go to the end and see what examiner is testing, right. 1. Advise the management with required calculation and explanation based on the SLFRS on how the above partial disposal. Now typically this is a consolidation questions, right. The prepare consolidated financial statement, you can see 20 marks have been allocated, and then there is another write-up that talks about the revenue recognition process of the company. So they are selling printers and they talk about installation and other free installation as well as maintenance. So probably to identify different performance obligations. So these parts I am sure Chamath will analyze these questions and cover in depth. So in the discussion of financial reporting. So again this 10 marks goes for financial reporting, right. So the rest of the question, now see the information given so far in the pre-scene. Now this information, this particular paragraph, when you look at it, right, they have given additional information in the question section. They are talking about materiality, right. The audit materiality and performance materiality for the, now see the, now if you are going for the exam without knowing this word, now what is performance materiality? What is audit materiality? Are they two different things? How do you differentiate it? 10 million and 8 million, so what do they mean? Whether to take 10 million or 8 million? So any differences above 1 million are to be considered as items that should be adjusted. So then what do you mean by below 1 million? Right. Now this is you need to have some understanding about auditing standard number 320, materiality, OML, overall materiality level, PM, performance materiality level, and trivial, the meaning of trivial. I will have a discussion, we will cover that. And then they have identified this misstatement, and you can argue, okay, this is below 8 million, 7.8, 4.8, only 8 million is same. So how do we see the impact on the audit opinion? So I mean this is a very easy topic for those students who have understood the concepts. And then the questions section, I wanted you to go to the question section, right. Now, so far these consolidation questions, one question on materiality that comes to 5 marks, advise your audit team on how to conclude about the formation misstatement. Now, they are talking about audit here, right. So, that is why I said governance and audit now. So, 5 marks allocated on materiality, and this is the question we expected. 5 internal control design weaknesses in the current financial statement given in the pre-scene. That is the key thing, which means easily if you studied pre-scene, these 5 marks, I mean you have to just determine 5 weaknesses. And then if you look at the balance question, for any of the 4 weaknesses, now you identify here 5, any of the 4 that you have determined the above, propose improvement action to mitigate. Now, you see the value of this question is not just 5 marks, you have to look at the 6 marks also, because they are connected. You can produce the answer in a table, okay, look here, there is a weakness, this is our recommendation, this is how it can be improved, and finally, right, if the company is not correcting this, assuming the company had implemented the improvement, right. Now, if company has, you assume that this was implemented, right. If so, how do you test whether these controls are working? That is another 4 marks. Now, altogether you can see from internal control in this particular question, right, the marks, right, 20 marks, such a big topic. While you are spending lot of time to do consolidation, with time pressure, smart students can easily score this 20 marks, and that is how you can be a prize winner in ABR, right, if you are smart enough to utilize your time to score well for both sections. So, let us see the art of answering all of these questions. Now, we did not read the questions facts, remember we only run through the questions section. But I am sure even if you read this, pre-scene is just 7 points, no? I mean that is really good, because you didn't know, you do not need to read another several pages in the exam. Already pre-scene is really comprehensive. So, this just 7 notes, I am sure these are not connected to our questions right now. These must be on the consolidation. Let us do a quickly run through that. In implementing certain aspects of the investment strategy, the company sold 65% of Hailer Transformation, that was indicated. No, they were trying to, this is an odd business in the group, Hailer Transformer. So, they have divested that, and then company can now appoint only 1 director to the board of HTL, because they have sold a significant part, they have lost kind of power. And in terms of appointing directors, then this information, other information on the disposal. So, this part relates to goodwill, right. So, all about the goodwill, impairment, adjustments, this is about the revaluation, right, the fair valuation to determine the net asset value. Fair value of NCI also given, the fair valuation, and then gain on partial disposal, adjustment, carrying value. Now, all this part we are, I mean examiner has clearly split the question section, this whole information relates to, that is why the question has been structured in such a way, I mean we do not need to even read A and B, it is isolated. Now, what is relevant for us is this one also particularly about revenue recognition standard application, and this section from here onwards is auditing. That is why these questions have come separately. So, altogether what you can see this, right, one is on the materiality, and then so this 20 marks we are going to we will see logically how do we get the best, I mean highest marks out of that. So, we can start with materiality and see how do we write our answer. After that, I already explained to you the pre-scene analysis. I mean lot of weaknesses we can identify. I mentioned about the segregation of duties, the journal entries, the systems are not connected and summaries may not be accurate, like that we can write a lot. So, there is 5 of those, and then to talk about improvement for 4, and then to see how to test. So, I will give a explanation of all of these areas, and then in a little while we can build our answer. So, what I suggest the best approach being you to make some notes while I give the answer. I am actually allowing you, coaching you to think your own answer, right. That is what I always want to do rather than just reading an answer. So, what I suggest you now here, the first question is to have a discussion on materiality, and then we will see how that can be answered. The rest of the question also, we have analyzed the facts, and let us convert those facts into answers. So, let us start now. So, materiality, let me, I mean you read that question about the misstatement, this particular area. So, let us recap your knowledge about materiality standard. I mean I am not going to discuss the standard in detail, but some salient aspect. So, let us put a blank slide here, right, and see how that works. Now, this is a quick recap on materiality. Very quickly, within 5 minutes you can learn. When it comes to materiality, the standard is auditing standard number 320, right. Right. So, this is the standard. I mean what you have to know for your exam is very simple. The standard in a nutshell is like that. First of all, you should know information is material if it is going to affect the economic decision of users. This has been the traditional definition. Of course, there is little revision with the new LK is 1, IA is 1, but now let us not go to all of that detail. Now, if I take this as a funnel, right, where we filter from larger level to smaller, meaning that when it comes to this level, it may not be material to affect economic decision. So, let us say this part according to the standard is trivial. If something is above that, you are very concerned. So, that is the word used in the standard, trivial. Now, if something is here, that's you have to judge either based on the size. Now, based on the size is something material, that is where we use certain benchmark. For example, if it is profit before tax, right, say 5 to 10% of the profit before tax is material. I mean these percentages can vary, these are just indications, right. If it is say 100 million and you can say 5% is material and whatever figure, size, but remember it is not only based on the size. The other aspects that we look at is nature of the error judged. For example, if it is a fraud, very sensitive disclosure, things like that matters. So, now the overall material, there is something here called now the highest level of materiality is overall materiality level. Right. Now, this is the level that matters when it comes to even audit report, the auditor's opinion, right. So, the overall materiality level, and specifically overall materiality level also we can look at the two aspects that you can look at in the overall materiality level. That is, one is you can look at by size. By size you can always have overall materiality level. Like I said, it is profit before tax. If it is revenue, it can be you can establish the size based on the PBT or revenue or total assets or anything, right. But what there is another, in addition to that, another critical aspect of materiality is, now let us write this word, particular materiality level. Particular materiality level. Now, particular materiality level is, let us say here size is 5 million. If any error is above 5 million, 5 million is the overall materiality level. Let us say we are going to qualify the opinion, but in this case auditor decide For related party transaction, I am going to set a low material of 100,000, even that 100,000 becomes material. Now, that is where auditing standard has allowed not only the size, if there is any particular items for laws and regulations, sensitive disclosures, things like that, we use this particular material level, right. So, that is either 5 million you can use. So, if you have identified certain areas, a related party, there is a disposal in this financial year, disposal profit is sensitive, auditor wants to draw particular attention and have a lower material than the overall material, let us say that is 1 million. So, that is the usual case, but most of the cases in the audit, you talk about this 5 million, that is 5% of profit, overall material level. That is for the final purpose. Right, when I say the final purpose, even to decide on the opinion, but what is very important for the auditors to conduct the audit, during the audit for the planning purpose, identifying risk, that purpose auditor use this performance material level. So, usually PM, not Prime Minister, right, performance materiality level is set below this 5 million. So, let us say auditor have a haircut of 1 million, say 90%, whatever you reduce it, a percentage. That percentage varies based on the auditor's judgment, but as a rule it is lower than the overall material level. Let us say as a number 4 million. So, why this 1 million is like the margin? Because auditor can't just use the highest we can audit. The reason is that even auditor fails to detect some misstatement, undetected misstatement and uncorrected misstatement, therefore audit is always keeping a margin. So, 4 million materiality level is called performance materiality level, and that is used for the purpose of risk assessment, and if I write here the purpose, risk assessment as well as for the audit procedures. And finally, trivial means, let us say if it is 100,000 set as trivial, anything below 100,000 ignore, clearly insignificant. Now, that is materiality level standard in 5 minutes. I can do same lecture in 2 hours, but these are the terms that you should know. There is a OML. So, remember this is at the overall audit strategy level, OS, auditor should set one is overall material level as a number, as well as if there are particular items, and then the performance material level can be set for this particular level as well as this 5 million here 4, right, and then to establish a number, clearly trivial. Now, read the past paper. The question that we read, what information given to you? Now, if you look at that, the information given is only, there is, we remember it was the, going back to this, here, what is given now? 10 million is what? The audit materiality and performance matter. Now, examiner used the word audit materiality. So, what it refers to? And then again use the word performance matter. Now, you see there is a 2 million gap. So, probably this, not probably this 10 million is the OML, and then there is another 2 million given for 2 reasons that I said, those I do not need to explain now in detail. There is margin of safety for auditors for 2 things, uncorrected, undetected, right, and used for auditing purpose always low amount, but what you actually find can be more, because auditor may not detect. That is why there is a higher threshold like 10 million, right, and then 8 million. So, we know that 10 million and 8 million is there, right. Now, if you remember this analysis, now if you take the figures which is relevant for us, what is given now is, if I erase these, we will put these numbers, right, then given in the case study, they have given this 10 million, I think it is 10 million, right. Yeah, it's 10 million, 8 million, and any difference above 1 million are to be considered, which means anything below 1 million may be ignored. Now that is probably trivial. Now from that point of view, if you go and see, we have 10 million here, and then the performance maturity level set for this number is 8 million, and then trivial, anything below 1 million is trivial. That's the whole story. Now we have to see. Now one thing you should remember, if you find, now what happened during the audit, you find an error amounting to 1.5 million. What are you going to do? Are you going to ignore? Saying it's immaterial, look here, my maturity level is 8 million, 1.5 million is not relevant. You can't say that. That is why we have a trivial. Anything above 1 million you have to have in a scorecard. There is inventory 1.5 million, there is a debtor 2 million, there is a provision another 3 million, whatever, let's say all our overstatement, assuming now there is 4.5 million, like that. Now in total I can still see this is below my maturity level, right? Even overall maturity level, I said this is the one you usually compare for audit opinion. But if I add on and I find my total is 11 million, now what happens? Now it is exceeding. So therefore, although any misstatement is below 8 million, I have to still consider if it is above 1 million. Finally, in total, if uncorrected material misstatement exceed overall maturity level, audit is going to modify. And that modification can be a qualification, can be adverse, we have to study that. So another thing that is presented in that case study, they talk about related party transaction. That is where examiner is silent on this word particular maturity level. But the fact that related parties discuss, you as a knowledgeable student can say, when it comes to related party, although it is below 8 million, still we can consider as material, because that is a possible area to consider item that what particularly sensitive. So easy. Now you can write the answer. Now let's go to the question and see how you can write the answer. Now we looked at these numbers, all are below 8 million. Now I already explained to you related party, you can just write one paragraph as the answer, right? Although this is above, not above 8 million, this can be particularly sensitive, therefore auditor can consider this 8 million as material, because the related party is material not by size, usually by nature. Why? Users, when they make economic decisions, they are particularly interested about related party, whether related parties can misuse companies' resources, right? Companies, can there be fraud using related party, right? So other two, what do you think? Now can you ignore this 7.2 million? Can you ignore saying it's below 8 million? No, I said, because it's above 1 million. This also we can't ignore, right? Why? Now if you add the two, what will happen? Obviously it's going to exceed the overall maturity level of 10 million. But when you write an answer, now what happens is the art of writing comes. Now what is the art of writing? Now see, if you want to write this answer, let's go to, when you want to write this answer, right, now what are our points? There is the art of writing, right? What should we write now? The examiner's requirement is, the question says you have to advise audit team on how to conclude. That's all, for 5 marks. Don't write 2 pages also. How quickly I can get this 5 marks? Solid facts. So what are your facts? Now talking in terms of the issues given, we have under provision for long outstanding debtors, possibly impairment of debtors. This is all we have. impairment of debtors amounting to 7.2, and then 4.6 slow moving inventory provision, and we know that this company has a slow moving inventory. We know they had a debtors problem. This time examiner is not asking you to identify ROM. ROM is given to you, right? Next time you have to identify these things. Maybe slow moving inventory 4.6. In addition, the non-disclosure, right? Now above two are possibly overstatement. Non-disclosure is omission. Remember, in materiality definition we consider both misstatement as well as omission. So this is omission, right? The other two are misstatement. Okay. This is a omission. This is a misstatement. This is a omission. All right. So now let's write answer. And all what we know from the examiner's point of view, what is given to us is we have a materiality level given, probably that's overall materiality level of 10 million, performance materiality level of 8 million, yeah, and trivial level of 1 million. I mean, now answer is very simple. Now remember, please write the answer. Now you can write the answer. What are the key things when you have to draw attention? Number one, in the answer, these are the points to highlight. The first point is, right, we'll take these two overstatement, right. You can say that both what? Impairment of debtors, I don't need to waste time again writing all and all to save the time, because every minute matters in our life. Both, I'll just say, but don't write in the exam, like both 1 and 2, right? Overstatements, overstatement, right, is individually, now see the word individually. Now I underline that word, even in the exam, right? Below what? PM, performance materiality level. But you can't stop from there. However, right, in aggregate, now that's the key word. In aggregate, these exceed. Now this is a very powerful point. Materiality level, that's OML of 10 million, right? Therefore, financial statements, right, can be what? Materially misstated. Which could result in what opinion? Modified. Modified. When you say modified opinion, you can say within bracket, right, depending on the case, it's qualified or adverse opinion. Now this is one aspect of the answer, right? One aspect to say, in total it can be material. The other thing that you can say, that it may also suggest from audit planning angle that when auditor finds a misstatement which is above the trivial level, it may also requires auditor to do, right, additional procedures, because if you check more in the area of say inventory, there may be more misstatement, it may increase the even performance materiality level. From audit planning angle, it suggests that auditor may perform additional procedures. Right, which could detect more misstatement. Now, whether to do additional procedure or not, remember these are depending on auditor's risk assessment procedures. That is the professional judgment. Right, that is the information that is very important for you to note. The other thing is, right, whether it is before, I mean when auditor say I am going to qualify, company may not allow, company will say no, what do you want us to do? So, why do not you adjust it? So, then we will not qualify. So, you can also say auditor should discuss with management and request to adjust financial statement. That is another point that you can write in the answer. Now, we have to write one more big point to get full marks. So, that is to talk about that related party transaction. It is 8 million, right. So, that is very, very important. So, I write in red, related party transaction 8 million, this omission, this is a omission, right. So, what? Although this does not exceed what? PM or both the same value, no, this does not exceed performance material level or OML. This could still be material based on the nature, and that is where the particular material level also can come. This could still be material based on the nature. Why? Say why, do not just say nature. Because, right, related party transaction by nature carries higher inherent risk. By nature carries higher inherent risk, higher IR. Particularly, if you want to be more specific, fraud risk. That is how you nicely conclude your answer. Now, there is one last concluding point. Accordingly, please write accordingly, if this is not properly disclosed, auditor may modify. Again, you can within brackets say qualified or adverse opinion. Now, let us say that 8 million is a very sensitive private deal. So, then auditor may even issue that is not only material and pervasive, then the opinion is adverse. So, then again I am questioning you, do you know the meaning of pervasive? Pervasive has 3 meanings. So, be very thorough before the exam about this. One is many account balances are affected, that is pervasive error, misstated, many accounts, many. One meaning is many. Second meaning is one, but that represent a significant proportion of financial statement. Third one is a disclosure that is fundamental to use. Now, this may be a fundamental key thing and that may be adverse opinion. I am sure now you got a very good idea. So, now let us come to what we did that part of the answer. So, let us come to the other part. Of course, if I continue to write like this and do it will take a lot of time, but now the internal control part I already covered. So, now we can easily discuss that with the I have put overall points to consider in these few slides, but still I prefer a discussion so that you can identify, think and identify what should be the appropriate answer. Now, again, as far as the case study is concerned, what are the issues that we identify? Right, I clearly told you that 3 systems, even in my pre-scene analysis slide, one of the big answers that you can write. Now, you see, even coming up with a better format for the answer is very important in the exam to make sure within a limited time you get the maximum marks. So, there is one part E, they say, describe what is the weakness. Next part F says recommend improvement. Third one, G says, how do you test, assume management has done this change. So, based on that, what we can identify, the point that I already mentioned to you, the 3 systems are not integrated. 3 systems not being integrated. So, if they are not integrated, how do you ensure that there is information which is flowing properly from one system to another? If you want to check and ensure that happens, better to do a reconciliation, but there is no reconciliation, not integrated, no manual reconciliation is performed. So what? Accuracy. Now see, these are assertions. Now this is a complete answer using very, technical points. So, reconciliation is not done, so what? Accuracy, whether the information is correct, everything is coming, completeness, even these 2 are assertion, accuracy and completeness of information considered for financial reporting is in question. That is our question. So what? Either you integrate the system or do a reconciliation. Those 2 are the things we can do. A reconciliation to be performed by independent. Remember, this is very important. If a reconciliation is done, it has to be done by an independent person, and then ideally such reconciliation should be reviewed by a supervisor, right. And I think another area that you can definitely bring as a recommendation is to work from system angle to integrate this system. That is definitely a suggestion. That is a big IT change. If there is such a change happens, the audit has to definitely evaluate using IT experts, right, how this integration has worked. Especially audit has to consider, remember any IT question, these 2 words are very important for you, right. What controls? What are the IT general controls in terms of say access rights, program changes, testing, as well as what are the IT application control. For example, how data migration to all of that sorted out. Now, that aspect has not been widely discussed here, but I am giving that also as a point. Then in my slides you found how they are prepared in accounts, that the FM get the manual consolidated sheet. Now, based on the sheet FM prepares, but if there is any error in that consolidated Excel sheet, how do you know? Who is going to detect? That is another weakness. Manual daily consolidated summaries are error prone. See this word error prone. Why they are error prone? Because they are manual. And no one, the other thing, okay, it can be manual, but is there a compensating control? But no one checked the accuracy, as the FM used summaries to verify ledger posting without ensuring. Now, FM used summaries to see whether journal entry is okay, but nobody checked the accuracy of summaries. Now, see, when you really look at control in detail, these aspects matter. So, what do you suggest? If summaries are not checked, if that is done by one executive, you get someone else maybe at a higher level to go through, right, how information is flowing, maybe a cross check, right, to ensure that summaries are accurately prepared, right. And I think this one I spoke, this full implementation of ERP system should go here, right. And this is the one, there should be an independent, actually even the implementation of ERP system will help you. This can be applicable to both answers, right, because now you can, now if there are manual summaries, how do you get rid of manual summaries? So, definite way is to automate integrate that IT change, auditor can recommend. So that's what that's why I said this point can be applicable for with full implementation of system, thereby integrating with all other application to eliminate manual summaries. Can we eliminate? And if that is done, again IT expert, you can evaluate IT control. You say ensure IT general controls and application controls are relevant. Now you can write this is like a common answer for both. Same thing I explained in the above. If this is not done, somebody should manually check, right, independent check that these summaries are accurate. Especially the summaries has to be checked together with underlining supporting data. And then from now see what is the meaning of this. When it comes to internal control, there are three things, and especially if you go through theory, you must know these three words very well. A control should be designed properly. Now here is a design issue. By design, the systems are not connected. The other thing is control. Okay, there is a proper control. Let's say somebody is checking the reconciliation, but has it actually been checked? Implementation. The third dimension of a control is operating effectiveness. That is to say that throughout the period the control is working. And for you to check that, that's why the third column comes. Now how do we know that on a daily basis somebody is checking the reconciliation, checking the manual summary? So one is for you to see, okay, there is a signature. You can say examine the signature. That is one. That examine, somebody can sign the signature, but how do you know whether that has actually been checked? Therefore, you can cross-check the summary with the source document, and that is in auditing called re-performance. So that's this second point, check summary with the detailed source document. You can write this point is called re-performance of a control. Now you see you are learning a lot of correct terminology that can be used. So re-performance. Now if you want to test any control, what are the methods available? You go and ask, have you checked? That's inquiry. You go and check whether signature is placed, that is examination, and then you cross check, you perform that process and see that has been done properly, and that is called re-performance, right? Done. That's the additional explanation. Now we have identified two weaknesses. Let us see what are the other weaknesses we can identify. Now you can look at this and see the other issue that we obviously found, the journal entry closure. Period closure adjustments are not I explained this to you, not facilitated by the system. Therefore, they pass backdated journal entries. So what? So what is very important. So it can give rise to unauthorized journal entries. This is very important. Now there is an implication. What can we do? One is to address this system problem that in design, system should be such that the closure journal entry should be a part of the process, right, and not allowing to backdate. That's this point. System should support the financial statement closure process and non-standard, especially after that if there is any journal entry, those journal entry we call non-standard. Now normal journal entries on a depreciation, whatever is automated, there are say sales transaction, auto journal entries, but there are impairment, all of these adjustments, so stocks, those are non-standard journal entries. Those journal entries should be checked by superior. And then now either way, if you want to test, let's say if this is a new system change, if there is a new system change, you can write the same answer we discussed above. If management has done a system change, I am explaining you what to write here, assuming that management has done a system change. If they have done a system change, auditor can use auditor's expert to evaluate, right, IT general control and application control and test some journal entries to see whether they have properly processed without backdating, right. But if they are not doing that, let's say they agree that somebody will check these journal entries, then you will see whether that somebody has checked. The other big issue is this inventory. We already discussed, these obsolete items are there, and then the company has failed to carry out physical stock verification that we discussed. This part we discussed. So what do you recommend? Again, the best recommendation when you have showroom, each storeroom, right, they need to have their own stocks, ideally in the ERP. So, those are called, I use this word, perpetual stock. When there is a perpetual stock system balance, you have to do periodic what count? Cyclical count. So, that type of counting process should be there. Any differences should be investigated and adjusted. If that is happening, perfect. That is the recommendation you have to make, right. Now, the problem is due to the current issue in the system, each showroom maintain their inventory records with aging, right. But what we are suggesting is a proper reconciliation can be performed between, now they do not have a system thing, they have their own stocks with aging, but at least some reconciliation should be performed between showroom records and the inventory module and physical balances, right. I mean, if you have two records of inventory module and the showroom, and finally what really matters is physical balance. So, these balances should be cross-checked. For location, physical verification not for perform. Now, let us say they have not done a stock count now, what can we do now? At least do a count now and try to backdate and reconcile. So, that we call rollback procedures, right. For location verification was not done, subsequent count can be undertaken with rollback procedures. In addition, like I said, you can write as a general point, as a control improvement, they need to have what? Cyclical, periodic cyclical count. Periodic cyclical count, right. And then I said two things. One is after the count, you have to investigate what? Any unreconciled balance and adjust appropriately. And another point that you can say, slow moving item should be identified and provided. So, all these are things. Now, what are the tests of control you can do? The best test of control, if you want to test the counting process, auditor should attend. Auditing standard requires auditor to visit, attend during the stock count and perform and observe what controls are there during the stock count. One person is counting, another person is taking the notes and they are reconciling, right. The counted items are tagged, RFID process, whatever, you go and observe. Secondly, you take your own count, that is called auditor is doing a test count, right. See this word, attend the physical count, attend, evaluate control and test count. All what I said is there, three things. And then if management is doing a reconciliation, you can test the reconciliation, and that can again be that re-performance things that I explained to you. And if they have done a system change, again you can evaluate. So, those are the answers. Then moving on, another thing, another big point given in the pre-scene I am taking here, risk management. Now, this is a point that you must note. Pre-scene says company does not have systematic risk management process. Currently, it is ad hoc. The respective department heads identify possible risk and take department wise they identify and take action to mitigate. This had been pointed out several times by external auditor, but they have not implemented this. So, lack of not having a integrated. Now, in short, they are talking about enterprise risk management, ERM. Now, this connects to corporate governance. When I talk about corporate governance question, I will explain to you. Now, it is very important, especially in a dynamic, in an environment of uncertainty that we are living today, the risk management play a much bigger role. It is a part of board of directors role. It has to be integrated to the entire system. If you remember, ERM is a process, right, that is applied at strategy setting level across the organization to identify events, assess such events and manage such events within the risk appetite so that business objectives are achieved. That is the course of ERM definition. But what matters in a question like this, they simply say they do not have a structured ERM, everybody is doing differently. What can you do? One is both to understand the importance of risk management. Remember, according to corporate governance code, if you look at, I can now open and show you the para reference. This book, there is one paragraph which says the board should identify the type and the extent of principal risk they are willing to take. That start with the board level, that is the risk appetite, and then company should have a sound system of risk management. That is a structured ERM approach. Who can do that? Either you bring a risk manager. If there is no risk manager, internal auditor can activate this thinking where there is one approach, talk to all the department heads, identify risk, evaluate it, come up with mitigation. That is in short. So what can you write as the answer? Very short answer. Implement enterprise risk management with the support from the board. Especially board support is required to set up a risk appetite and that sponsorship, that it is a serious process. And because this case study is silent about risk manager, maybe internal audit also silent, but internal audit is in a better position to support management to implement ERM as an advisory work, right? Remember, internal auditor play both work, advisory and assurance. And now, if you want to see internal audit has been practiced actually, risk management is actually working in a company, what can you do? Especially at board level. If you need evidence to see whether after you advise they are doing risk management, what can you do? One, ask for board minutes, not only board minutes, management minutes, and see whether risk is an agenda item and whether there has been any risk discussion, mitigation, follow-up, minutes, check in the minutes, right? Assess the risk has been considered by the board. That is one of the best way that you can check. In addition, remember, you can talk to internal auditor or risk manager to understand, right, how risk management is working in the company. That is this inquiry from internal auditor. Right. Then another point, this is the super user, that part also I explained to you, super user access, which allows system, super user can be. Now the issue is, this part is very important, super user access could be misused, right, as management, see this word, management overriding control. Remember, fraud is in your syllabus, even another exam question, this matters for your paper. Fraud risk, especially management, senior management can bypass internal control by debiting and crediting any account. That super user I explained to you, Satyam. So specifically we should ask, if you continue to give, one is you have to say no super user, that's ideal, no super user, right? Because it's such a high risk area where the privilege can be misused. So what you can recommend, without a super user, can we come up with an authorization matrix for manual journal entries, that the journal entries above this figure so and so will approve. The other thing, if they continue to use this super user manual journal entry, I mean definitely you have to say no to super user, but even going forward on other journal entries. Now remember, data analytics is a part of your study text and syllabus. You would have read the chapter on analytics, outlier identification using Z-scores, all of that. Now especially today's data analytics can be used to analyze 100% journal entries, the entire set, and to unearth anything unusual. Internal auditor should use data analytics to review unusual journal entries, draw particular attention to super user login. And what you can do to see whether this is happening, you can actually do a reperformance kind of a thing, list of journal entries passed by this, if they continue the super user, and review and test whether these journal entries are appropriate. In addition, like I said, if management implements authorization metrics, you can see, you can examine whether journal entries have been authorized as per management authorization metrics. Then another final point, that is, the finance manager prepare financial statement based on the TB extractor. Now they simply say that FM prepares financial statement based on the TB extracted from the QuickBook. However, accuracy of source data, that is trial balance and the underlying reconciliation, the control accounts does not seem to be monitored. Now this part specifically I have added That is to say, because this whole setup is manual, we have already discussed that problem, there is no integration, right, the manual entries, the super user. In this context, it is very important that you do not just check the TB and see whether accounts are okay, but like the year end process, especially at the time of preparing accounts, the finance manager has to ensure there is adequate control, especially over closure process that we already discussed, the journal entries, things like that, and ensure that the control accounts are reconciled. At least we have indicated 2 key things they can do, those are important. I mean, we have not only 4, there are a lot of issues we have put down here. So, as a control, again you can inquire is the simple way, inquire from finance manager what control when you prepare year end account you exercise, especially on the closure process. In addition, right, you can review main documentation relating to the year end, especially you can review journal entries, the control account reconciliation, those you can check. So, that is the complete answer for that question. From the pre-scene, you know how easily we identified examinable questions, and then in addition we also discussed, I updated your knowledge about materiality. So, our next question in this paper is to look at corporate governance. Right, in the same paper, see, this is about 45% coverage. So, we have done a detailed analysis of internal control, the audit reporting, things like that. So, in these 2 questions, when I say 2 questions, one is on corporate governance, the other one is there is a question on ethics. These are definite questions that will come even while you are listening to a past paper discussion. I mean, my idea is also to explain to you how this theoretical knowledge can be used in any practical situation. So, from that perspective, this is a very good question where examiner has really expected, while you have prepared to answer all the corporate governance in terms of theory. When I say theory, what is in the book, open book, right. So, when I say open book, that is your corporate governance code, and then in addition, you know, in the study text there are a lot of things about corporate governance, especially board of directors role, these 4 roles, the strategy role, scrutiny, performance, those are non-executive directors role, and the key role of the board, the 4 roles board of directors are playing in terms of strategy formulation, monitoring, right, and accountability, the strategy formulation, monitoring, accountability. So, those key aspects are very important, but this particular question examiner wants in the context of COVID, the new normal that we are living, how the governance practices should change. That was the theme examiner wanted in this question. So, in this question there are 2 aspects. One is to look at the corporate governance. They have tested remuneration committee related provisions as well as ethics. So, let us go through the question, good analysis of the question, and then I have summarized certain aspects of the answer, and then as we like we did in the previous discussion, let us derive the answer for some other areas which I haven't mentioned in the document. So, all of that we are going to do probably during next half an hour to 45 minutes. So, let us start with the question. Now, if you look at the question, that is question number 2, a complete question from corporate governance as well as ethics. Yeah, this is the question. Now, like I always say, let us go to the end. Now, here I mean just 2 paragraphs, and then examiner is asking, considering the issue faced by the company during COVID-19 outbreak, propose 5 actions together with importance. Now, you have to propose 5 actions together with the importance of such actions to the board that board of directors should adopt to improve overall governance oversight of the board in terms of the code of conduct. Code of best practices. Now, you see this book, while it looks that this question is directly from the book, it is very hard to just copy paste 5 things and write, because the question has to be written in the context of COVID-19 outbreak. So, now in that context, what are the contextual paragraph given to us? Only 3 paragraphs. So, we will read and see. Anyway, this is something to do with board of directors. 10 marks. I mean, how easy, while you have to put lot of effort to do consolidation, all of that, if you are a brilliant student who can apply corporate governance to today's environment, you can get this 10 marks very quickly. And then other 2 paragraph they have given, 3 paragraph and remuneration. Now, this is the skill of reading the question in 5 minutes. Remuneration committees, which means another 10 marks on remuneration or something else. Let us see. Analyze the, no, this is CFO's position and safeguards. There is a problem. CFO safeguard means code of ethics, right, 2020. In the above context, advise the role played by the remuneration committee. Both are there, the remuneration committee as well as code of ethics. So, another 10 marks, so 20 marks. Then this part is what? That is about consolidation, right. Now, out of this 25 marks question, another 20 marks allocated to this section. Now, you see that is where 40 plus coverage coming from this paper, this section that I am covering. Now, let us see how we take this question, which means only these 3 paragraphs are relevant for the question. I mean, it should be absolutely easy then. So, how do we look at it? Okay, let us see the information carefully. Automart PLC, automotive manufacturing company, the supply chain is widely spread all over the world, and as a result, the supply chain was severely affected by COVID-19. So, needless to say, if you take a look at all Sri Lankan companies, especially those who are in export companies who are importing raw material from different parts of the world, right, not only Sri Lankan crisis, but logistically. Now, if you take China, the entire supply chain, right, due to COVID outbreak and some issues they had, there was, I mean, unprecedentedly in Sri Lanka, the air freight cost has gone up, and there are a lot of vessel delays, supply chain disruption coming from logistic angle. Now, if this is the case, if you do not receive supply on time, how do you run the business? Company had faced several critical issues due to the outbreak. What are the issues? You do not have material to manufacture. There are, I mean, working capital issues because you can't collect your debtors maybe, and in addition, loss of key people. Some people are leaving the company. Now, that is not a supply chain issue, right? Now, see, there is a migration, maybe some people affected by COVID, serious health issues. Supply chain disruption, loss due to fraud as a result of, now see the fraud, because the people are having a real hard time. This is where if you look at the fraud triangle, there are 3 things, right. The attitude and rationalization is a people element. So, there are 3 things. One is incentive or pressure, opportunity, attitude. Now, when I say these things, some of you are wondering what I am talking, right. All these are syllabus topic. When it comes to fraud, those fraud triangle you should know now, especially in a context of a crisis, it may be political crisis or the COVID crisis, the people undergo a lot of hardships. In that case, the people may, there is a possibility, high chance of fraud. The fraud risk naturally increases. So, what they say is all due to all of these issues, and also this company has not been able to invest on, I mean, investment opportunities they have not been able to seize. Significant drop in the share price and conflict with the regulator, violation of law. See, all the issues, if you really break the type of the issues in this paragraph, right, I will capture that in a slide, but even now if I highlight to you, one is a supply chain disruption, number 1, right. Number 2 is financial working capital issues, number 3 is people issue, number 4 is a fraud issue, number 5 is something to deal with seizing opportunities, the investment opportunities, right, and last one is about even the decline in market price and violation of laws. So, all these issues are given in one paragraph to you, and following statements made by Nihal, chairman of AP, at a recent board meeting about the responsibility of the board. So, that is where you should see this topic relates to board of directors in a crisis time. That is where I like this question to some level. While you know traditional corporate governance, you have to modify your answer to suit this context. So, especially there is one sentence, the leadership of the board of directors should have given, the leadership board should have given during a crisis time, right, is different from the normal business. That is the central theme of the question. So, in that context, considering the above, propose 5 actions, 5 things we have to do and why they are important, right, to strengthen overall governance. So, that is the question. Now, if you take that point of view, this is corporate governance. One unsuccessful student, the wrong approach to this question is to use the open book, right, go to the section of board of directors and reproduce. You will not get any marks. The entire, while you have a good understanding, now see, no book now. What is director's role? So, if you look at the theory sessions recorded in even the webinars series, so I have explained to you the key role of the board in relation to today, right. One framework to analyze, if you remember, one framework to analyze board performance was this very powerful framework to analyze board, the role of the board, right. What board of directors are doing? I mean, students without any book should be able to have this type of good understanding about framework, thinking framework, what directors are doing. One is they are doing something today, present. The other role is future. Right, if you take present role and future roles, what really matters to board of directors, right. So, one thing which is very important that I mentioned to you, I mean, when I say mention to you, we discuss this role. Something that directors, and here also you can say that this is more of internal, this is more of external world. Now, connect with internal world as well as external world. As far as future is concerned, right, externally connected futuristic thing directors should do is SF. You can tell me what is SF. Without SF, business can't survive and compete. That is about strategy formulation. When you got a strategy clear that this is the direction that we are going ahead in terms of automation, getting the right people and going to new location, you can't just make decision if you don't have today, right, a good policy framework, right. So, there is in relation to the future, internally you have to have good policy framework. So, that is the director's policy. Remember, when we take policy, these policies are eventually converted to internal controls, the controlling roles, right. When you have such control framework only on a day-to-day basis, when management is running the business, see, this is management, they are running the business. So, the circle is superimposed, this is the board is watching whether directors are doing the right thing. So, these outside directors as well as executive directors who are inside, they will have to monitor what is going on, monitoring role. And finally, right, today you have to tell the external world, that stakeholders. Now, see, behind this pyramid you have, below this, a lot of stakeholders are watching, not only shareholders, stakeholders. So, external world, right, you have to be accountable. Now, accountability is what you disclose in the annual report, your communication to stakeholder, all of that. Now see, this is theoretically what directors are supposed to do to ensure the management is running the business. That is the true nature of corporate governance. You know, corporate governance means according to Cadbury report, the way in which the process in which companies are directed and controlled. This is the direction, this is the controlling element, and this is the accountability. If this is the case, COVID, so what? One is in terms of strategy, what you wanted to do normally, now it has abnormally changed with the COVID outbreak. Lot of the plan, investment plan, the expansion plan, all of that is going to stop temporarily. What is really matters at the board level to see, even in the COVID time, some of the companies, the immediate thing they did, they made some bold decision to preserve cash, right? As our immediate priority, strategic priority is to have cash as much as possible. And then, because there are a lot of disruption happening, we need to have stocks as early as possible, right? That is enough for us to continue our supply. Have buffer stocks. These are some fundamental decisions, right, in a crisis time that board has to make. And this is the real time that our people are really suffering. Some people are, they got COVID, their families are affected. So then we need to really think about the people, especially the succession element as a strategy, our succession, whether we have backup people, and most importantly, right now all of this, the entire company's policy framework should now support even some decision to be changed, that we can have excess cash, we reduce our investment, we deviate from the strategic plan. So these policies are also going to be changed. Now I am also talking in relation to that case study, right? What the board of directors, the way they are monitoring management is through board meetings, right? See, I am writing in red color here, meetings. Now, what happens with the COVID now? Usually board meetings are monthly, quarterly. Now, see, most Sri Lankan companies frequently, maybe weekly, you come and meet management when you can't come and meet with the COVID. See, all virtual meetings, it may be Zoom, video conference, wherever you are, right? Virtual meetings to really see, regular meeting, more frequent meetings to address, right, burning issues, right, address burning key issues, as well as to see whether there are any market opportunities that can capitalize. So regular meetings is very, very important. The other thing board should really monitor is what? Remember, during this crisis time, I explained to you the fraud risk is going to be very high, and the traditional control of sign-in papers, physically, all of that can go. Digitization can come, lot of digital. Now again, digital can be a strategy here. Now see, if you take the supermarket sector, how Sri Lankan, some of the prominent supermarkets struggle, and now they are stabilized in terms of online shopping to all of that. So when it comes to internal control, the digital signatures, now one can't expect I want a hard copy sign. Now that control thinking also can change. And the fact that the fraud risk is high, how do you monitor? How internal auditor should conduct virtual audit? Remember, under board of directors, especially from monitoring angle, audit committee comes. Right, audit committee and internal audit, they have to look at a very different strategy, that now you can't physically visit branches, can we use data analytics to operate differently? All these answers, you can have now totally different answers, just one thinking framework. We didn't look at this book, but finally all this is I can connect by paragraph to show how each of these points connect to the answer. So see, a lot of things we discuss here about the meeting frequency, internal control angle, what need to be changed, things like that. And then this is a big area, external world, especially during a crisis time. This stakeholder conflicts, how do you manage stakeholder conflict? Various conflicts with stakeholders, how do you manage? Now see, during the crisis what will happen? Employee will say, please increase our salaries. Supplier will say, look here, we are going to go bankrupt, we can't supply you, give us a loan. Shareholder will say they are really worried about security, they want to withdraw, to whatever, like that. The government is pushing very hard that the protocols to be implemented. Now, all these multiple demands, how do you manage? So, that becomes a big topic, stakeholder management, managing conflict in demand. So, you can use like answer framework, who are the powerful stakeholders, how do you address them, what is your strategy? Do not forget, the big item in all of this is, right, during the crisis time is risk management and business continuity planning, BCP, and also people heavily use this word resilience, like bounce back. We do not fail, we learn, and tomorrow we will again start and go even if we fail, right. How do you build resilient business? And you see BCP is even there is a separate ISO. Now, you would have heard the BCP strategy of identifying disruptive event. What can happen tomorrow? If one of the manufacturing location closed due to some reason, how do we continue production? What is our strategy? Right. So, those are covered in business continuity planning, the strategy to reduce 4R strategy, right. So, it can be the reduction strategy, recovery strategy, right. So, like that there are various things in BCP. You can hire a BCP expert, advise the company, can we document our business continuity plan to deal with the disruption. Lot of answers were discussed. Now, let us put these points nicely together so that you can understand all of this through another framework, or not really a framework. Let us put them clearly, all the points that we discussed so far, and then after that I will connect them to the answer. Now, here all what I discussed in the COVID-19, this is your answers now. After all of that, these are going to be topics for the board in the context of COVID. Most of the things I explained to you. The first thing to look at, you can even write now your big topic, and then you can describe from governance angle, how do you explain. High degree of uncertainty, in that context your strategy and plan need to be changed. There are a lot of revisions required, right. A lot of revisions required in terms of your plan. Because of the uncertainty, revision to strategy and plan. Now, to do that, you need to have more frequent board meeting, the monitoring process. The board meeting should be structured in such a way that you meet regularly and discuss these issues. That is one topic. Another topic is risk of supply chain disruption. Can we have our BCP for the company, and company can run? How about company supplier? The supplier also should be able to run, whether the supplier has a BCP, right. And as a part of BCP, like I said, the 4R strategy to for example, how do we reduce the impact of disruption, 1R, and then how do we, this is a reduction strategy, how do we resume our operation after a disruption, right, and if there is a damage, how do we recover. So, like that, BCP thinking has to come. And as a part of your reduction strategy, maybe to have stocks at hand. And this is very important when people get stuck or serious health issue, whatever, do you have a succession strategy from people angle? And most importantly, I said without cash you can't run the business, whether we have enough liquidity and solvency, right. If not, how do we secure the support from the parent company, from banking or whatever the finance, and then aggressive cost cutting can happen. That cost cutting can be a discussion at the board, and like I said, the stakeholder management becomes a hot topic. And then last but not least, the internal controls practices need to be changed, and the financial reporting. And in addition, another thing that is not specifically mentioned, but it is a part of this, the big one is all about how do we manage risk. Now, I am connecting this, you can write down the answer now. How do we write this as an answer? What need to be changed? So, what I am now showing to you, I am now taking from the book and telling you how to change that as an answer. Now, this is the, when you go through the book, this is what you can find under section A1. Section A1 says board should meet regularly. Do not just copy paste this, but you need to align this to the answer in this case. So, what can you write? Board should meet regularly to do what? More frequent board meetings to address, right, immediate concerns and to perceive opportunities. These meetings can be, please write, these meetings can be held virtually. That is something that examiner expected, and you can write. Frequent board meetings to resolve urgent matters. This is like the answer, right? Capitalize opportunities, especially, right, strategy and monitoring role of the board. For this purpose you can meet, right, especially if these meetings can be in virtual form. Right, in a virtual meetings, how do you ensure the effectiveness of such meetings, right? The company secretary, how you can ensure that the information quickly flows, right? I mean, virtually most of the things can be done efficiently. And then, if I take anything from, now you can open the book and read. Now we are converting this part to an answer. 1.2 of corporate governance says, board should have entrepreneurial leadership, entrepreneurial making money, but within a framework of prudent and effective control for managing risk, which means this is broadly risk management. There they talk about to have a good business strategy and the skill and experience, succession strategy and laws and regulation, company's values. See, there somewhere in the same paragraph it says business continuity and risk management. Now, these are the areas where you can easily connect and write your answer. And finally, I mean last point, performance monitoring and evaluation of strategy implementation plans, all of that. Now, how do we convert this to an answer? One by one you can again write. I mean, you can actually connect this first point, why board should meet regularly, right, to discuss urgent matters, capitalize opportunities, and also to check the process as a part of monitoring and evaluating. Now, once you have a new, let us say your new strategy is digital, now whether this digital strategy is working properly, digital supply chain is working properly, you can check. Now, the answer you can write, specifically you can write a point, during the crisis time, most of the people can be affected, therefore, especially those who are at a KMP level, right, senior managers and specialized people, whether company has succession strategies to safeguard the continuity. And then the stakeholder interest, this is a big point I already explained to you. When you are writing the answer, you have to write, during a crisis time, please write, during a crisis time, there can be conflicting stakeholder demand. Please give example what trade union expect, what shareholder expect, what government expect, and what your debtors and creditors expect. Debtors want quick money, right? I mean, they are asking more time, but suppliers you have to pay soon. So, how do you manage working capital? Then you have to write effective stakeholder communication and how do you manage conflict in demand, that is another answer. And most importantly, please write business continuity plan. What can you write? If company does not have a structured business continuity plan, they can hire an expert and together with the input from internal audit and risk management, you can implement, document a business continuity plan, please write, which will identify possible disruptive scenario together with what? Continuity strategy, the 4 R's. The continuity strategies I explained to you, right? What is the reduction strategy? What is the recovery strategy, right? What is the resumption strategy, like that? So, you can have a documented business continuity plan. If you do not know business continuity, you can Google and see there is a standard also on business continuity. And that is a hot topic anyway. The whole idea there is run without disruption. And resilience is similar, after a continuity, how do you continue? the crisis management becomes very critical, because suddenly crisis can happen. You see the strike, to whatever things happens, how do you in a crisis time, how do you have a crisis communication plan, crisis management is documented in the company. Right. This is our crisis management approach. Is there a crisis management team appointed and they have been trained to handle a crisis or disruption? Those can go to your answers. This is a very rich answer you can build. So, I am giving you headlines and I am verbally now telling you what to add. I can start writing all of this, so then that takes a lot of time, but I am most importantly at your level, you need to have maturity to build your own answers. Then we wrote lot of points. Now take some points from this area, and don't forget this laws and regulation also you can discuss. The possibility of violation of laws can be very high, therefore company should be alert. And then this is the same point, and like I said, professional advice we already discussed, advice on risk management, business continuity, crisis, the board of directors can see. And especially please write from financial reporting angle, you can say during the crisis time the demand will gradually drop down. You see what is happening to share market, share prices will suddenly, the active market may not be there. How do you apply now IFRS 13, the SLFRS 13, the fair valuation, right? So, we have to be particularly concerned, we have to particularly be concerned about assumption and judgment, because during a crisis time specifically fair valuation can be affected unless those assumptions are carefully looked at. So, these words, the judgment and assumptions are very, very important, which means this requires audit committee additional time to go through significant financial reporting issues. Give an example, fair valuation of investments, and maybe for some companies going concern issues which auditors would have raised, those areas and estimates. And then another big topic is internal control. There will be a lot of changes to companies, before internal control, risk management, it's a new risk landscape, a lot of new risk will come. So, how company can manage those risks? So, then you can explain internal auditors support, or to establish risk management unit, or to get some expert advice on how do we do risk management. And lot of changes to internal control systems can happen, right? Traditional control, especially through digital signature, without having hard copies. See, physical count if you are not doing during the crisis time, how do we still give assurance to audit? That was really a hot topic during crisis time. No, how do we do stock count? That is where you can really convince auditor, right? Look here, we have a reliable perpetual system. Our internal staff have done a cyclical count, evaluate that control. Why are we doing a full stock count again at the year end? Those are the very valid discussion that can take place. Right, and audit committee's role can change like I explained to you during a crisis time, and especially the fraud related areas. I mean, we have discussed lot of points under this one. So, now let us go to the other sub question here, that is something to do with remuneration. If I go back to the paper, this part, another few information given. 30th September, due to the issue mentioned above, 30th September last year to this year, company's financials were not favorable. However, AP has recently approached a foreign buyer, right? Am I reading the right part? Yes. Yeah, I think this is the ethics as well as remuneration. Yeah, this is an important area. So, recently approached a foreign buyer, and the buyer expressed willingness to sign a significant 3-year contract with the company to purchase the product. Significant customer, right? As a prerequisite, the buyer has requested the financial statement of the company for 31st September to assess the financial viability. Yesterday, CEO approached the CFO, who is a chartered accountant, and gave instruction to recognize certain invoices as revenue, right, which were not recognized because the revenue recognition criteria has not been met as per SLFRS 15. CEO emphasized the importance of this adjustment to reflect the better profit and working condition, right, and which also linked to the KPIs and incentive of the company. Further, CEO explained that winning this contract will be important because this contract brings significant profit to the company, which will help to boost the company's performance. Also, CEO reminded that CFO, both of them would be eligible for executive share option of the company. Now, if you summarize so far, please write one thing that we found that company is going to context is that there is a new contract, long-term contract. The context is that there is a, if I summarize the relevant facts for our analysis, there is a long-term contract, and as a result you have to produce financial statements for this purpose, right. And now what has happened is CFO was forced to do what? Forced to do this, we call in auditing and reporting angle premature revenue recognition. Before you earn, you record some recognition, and then the rationale given for this is, you know, look here, one is this is important for company's future. That's the rationale. You have to attack, I mean you have to really counter this. Other one is, look here, both of us are entitled for executive share option. Now, that is a very tricky one. Now, see, that is where this can connect to remuneration practices, right. Executive share options scheme that he is going to propose at the next board meeting. Now, especially during a crisis time when executive share options are given, you know, those criteria company need to be really sensitive. The CEO further stated that he is planning to use this contract as a tool to calm down the employee union. Now, that is the stakeholder management, right, trade union. Now, see, can you really calm down, because you are giving misleading, no, who have frustrated with their salary cuts over the past 2 years. Both CFO and CEO are the executive directors of the company. Now, see, now in this case they are not only management, they are also directors. Now, how do we act? Because the director's interest is to challenge the management. Now, in this case, this word is very, very important. When you write the word, there is clear conflict of interest, right. Then remuneration committee has not met regularly, and obviously that is a big issue, especially in a crisis time you have to meet due to the pandemic. You can meet virtually, that is a big issue. Therefore, the directors and senior executives remuneration policy have not been reviewed periodically, serious issue. So, we can also write, I mean examine also expect in this question to analyze remuneration committee practices. Now, how do we write this answer? Now, first of all, what question we have to answer for another 10 marks? One is analyze the CFO's position, safeguard available for CFO in the context of the code of ethics. I mean, always in the past exam question has been based on the conceptual framework. Let me to recap that and use this question again. In the above context, advise the role to be played by the remuneration committee, right, especially. I mean, that is all for 10 marks. Again, another easy question if you approach properly. This is how you should approach this question, right. Now, one clear thing is, let us start with the ethics question. Very easily you can score those students who know conceptual framework approach. Now, conceptual framework approach requires you to do 3 things. One is identify threats. Now, in this case, what are the threats? Then after identifying, you have to evaluate how significance, evaluate the significance of threats, and then third one is safeguard. So, they ask in both. Now, the context given to us is that the CFO, right, you can write this is the context. CFO has been asked, has been even pressured overstate revenue, right? Because why I use the word overstate, very clearly you can establish that SLFRS 15 criteria are not met. Now, this is the context. Further, you can add another context. Further, this request has been justified on the basis of what? Company's future plan, then crisis situation, and also their share ownership. Now, this is the context for the question. We can really give a short summary, but what is important is how do you derive the answer. As a result, is there any threats to fundamental ethical principles? So, that is the first thing for you to think, okay, what principle is going to be affected. Now, when we say threats, these are the threats. I used this SAS-FI framework before that. What are the principles? As a CFO, you have to be objective. Now, you have to tell me which principle is violated in this case. Is it objectivity? Right? Because this is at the heart of your professional judgment. Objectivity means, as a professional accountant, the objectivity here means the O. The objectivity means, see this, objectivity means you should, when you make professional judgment, you should not allow any one of these to affect your professional judgment, right? What are these things? One is conflict of interest. Now, very clearly there is a conflict of interest. Now, what is the conflict of interest present in this case? If you manipulate, you are going to probably get share ownership. The company will get financial statements status, and you are a director. All of these are conflict of interest. Then conflict in interest or bias or undue influence. Now, these three words, if you are not sure, you can open the book. The objectivity is defined, right? Professional accountant should not professional judgment that you are making to recognize revenue should not be affected by conflict of interest, bias, undue influence of others. You can write, now this is the answer, please write. In this case, the CFO's judgment in making revenue recognition is influenced or affected by conflict of interest, right, bias and the influence from CEO. That is theory. Now, add a practical line from the case study. This is due to the current uncertainty in the company as well as CFO's entitlement for the share ownership scheme. That clearly affect his ability to make right decision. One is objectivity, gone. Next one is integrity. Integrity also affected in this case. How integrity is affected? Integrity means straightforward and honest. Specifically, Code of Ethics says, if you prepare anything, any financial statements with incorrect information, when knowingly that it is incorrect, you break the integrity. Here, integrity is affected, objectivity is affected. Not only that, professional competence and due care is affected. For each of these, you can have a line. How professional competence and due care is affected? Especially due care means when you prepare financial statements, you have to follow respective SLFRS. In this case, SLFRS 15 not applied, and you are not acting using that knowledge. Then that is affected. The last one that is going to be affected is your professional behavior. So, as a professional accountant, imagine if this case is known to the public, the reputation of the institute or reputation of the profession is going to be tarnished, and it may be not in according to the law. If you violate the law and going to damage the good reputation of the profession, it is going to be the wrong. Now, you can write the answer. Now, please write down. How do you write the answer? in this case, now objectivity part we already wrote, right. In this case, the CFO's objectivity is threatened due to the conflict of interest, right, his own bias and influence on the CEO. So, explain, we covered that. Similarly, right, there is a failure to maintain integrity because the financial statement misrepresent revenue. Third, further, professional competence and DOKI is affected as financial statements have not been prepared based on the SLFRS. Fourth point, right, if the case becomes known, it can tarnish the reputation of the profession and it may result in violation of law. That is the answer. So, all of that happened due to what threat? So, the threat associated in this case, these are due to, one is self-interest threat, especially that conflict of interest coming from there, and there may be some part of intimidation, kind of pressurization by the CEO, right. Now, if you take SASFI, self-interest, advocacy threat, self-review threat, familiarity threat, intimidation threat. So, we can take these two to explain the answer. So, in short, this is your answer. In this case, due to self-interest and intimidation threat, several principles can be affected as outlined below and write about integrity, objectivity, professional competence and DOKI and professional behavior. Now, what is the safeguard? You can probably say safeguard. No, if you really want now very clearly, there is a conflict of interest, right. The main safeguard available to CFO is to discuss with the CEO that if he is going to listen to this and do that, it can result in a serious violation of these principles. Therefore, he has to decline that, right. And then if CEO is not listening, probably you have to take it up with the next level, that is with the audit committee, right. Or in the most serious case, probably to take it up with the Institute Ethics Committee. All those options you can explore, but in the worst case, if you see that this is not going to be resolved, even Code of Ethics allows you to resign from the organization. So, all these options can be explored. The other thing is examiner connecting this answer to the Remuneration Committee practices. So, what are the points you need to draw attention in terms of Remuneration Committee practices? Here. So, very clearly you can say that, okay, when you start this answer, you can talk about the main principle of Remuneration Committee. What is the main principle? That there is a formal and transparent process of determining the remuneration of executive directors and management. The first point. What are the points? Formal and transparent process. And that process should make sure that what? The company is, the remuneration that is paid is enough to do two things. One is to retain key people and what is the other one? Attract. Now, this is the principle. The level of remuneration should be sufficient to retain and attract. So, the remuneration, now you can give a brief outline and say that currently there are few issues because the Remuneration Committee has not met. Now, this is from the case study, right, not met, and also there is no recent review of the Remuneration Committee practice. And now, you can write in red color the most critical one which is relevant for this case study is that during a crisis time, right, Remuneration Committee has a key role to play. In what areas? Please write down. One is the current incentive scheme need to be revisited to reduce the pressure which is created to people, which will eventually otherwise result in a fraud, right. And the when it comes to target setting, Remuneration Committee should ensure that they are achievable in the case of a crisis. So, those targets need to be revisited, especially from share option angle. The Remuneration Committee should ensure that there is no conflict of interest, where certain people like at a director level, right, they make some decision that has a bearing on their remuneration, and all those practices need to be re-evaluated or audited. So, those points you can definitely bring under remuneration committee. So, specifically you have to write that there is, in this case, there is a conflict of interest, because that both are directors and they are going to be involved in this long term contract to secure the customer, and you can comment on the answer. The main principle of remuneration committee is to do that, especially another point that you can highlight, right, because this case study specifically talk about share ownership. Now, when you give this ownership scheme during a crisis time, you need to be mindful that now share price would have drastically come down. So, be sensitive that the share options are given at a reasonable price, the proper valuation techniques, and a review of the underlying assumption, specifically in an unstable market. That is a big point that you can use, right. So, therefore, finally, a remuneration committee should have a fair balance about, while we have to incentivize people, right, we have to make sure that we are not over incentivizing nor creating unnecessary pressure. So, those are the bullet points of answers you can write. So, with that we will conclude this session. I am sure not just beyond, because I do not want to just write to open the answer and say, look here, this is the answer. So, I am now telling you, you can now, institute has published the answer, go through, and now you feel you do not need to rely on just an published answer, and that you are very confident that you can, either without a book, now see how we build the corporate governance answer, either without looking a book, that in your mind you can relate key concepts, and most importantly, connect the answer to the case study facts. Now, see, when you write this remuneration committee, you have to certainly discuss how share price can be affected in a valuation during this crisis time, how sensitive remuneration committee with the crisis time, how they should change the current remuneration scheme, not to set aggressive targets. Now, all that you have to link to the current answer. Similarly, I explained to you in much detail the code of ethics answer also. Answer there is to say that there is a self-interest as well as intimidation threat. These principles can be affected like that. So, then what are the safeguards? So, like that. So, now you know the importance of this section. While you prepare for ABR, put adequate effort not only for financial reporting, but this is area you can really score if you are prepared. So, with that we will close the session. All the best. Thank you.